In this video, I will be speaking about BTC USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the on-chain data to see how Bitcoins are moving on and off from exchanges. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment just tested exactly the previous cycle high and started rejecting it to the upside. In fact, from here, all the previous bear market was developed. Here we had the halving, the market entered into a bull market, then we had the bear market, which in my opinion ended here. In fact, from here, I do not expect the market to create a new lower low. I expect this to be the low of the current bear market that has just ended, and this in my opinion is the start of the new bull market. Now, I do not expect the market to create new all-time highs until 2024. Only after 2024, so only after next halving, that is when I expect the market to print new all-time highs. Now, if we look a little bit more at the technical side of the market, more in the short term, so we look at what kind of structure the market has been creating here, what we can notice is that we just had a break and retest of the previous monthly high. This was previous monthly resistance. The market broke it to the upside. At that point, it was turned support. The market retested it and respected it as support and started rejecting the area to the upside. In a situation like this, we could expect more bullish price action to be developed away from this area. Now, dropping down the weekly, what do we have? Now, from a weekly perspective, we can see how we just got a very strong impulse to the upside. Now, in general, after an impulse, what you would expect is a potential correction before then getting more bullish continuation. So in a situation like this, we could expect short-term bearish price action and then more longer-term bullish continuation. So essentially what we could expect is a potential correction to this zone, which is previous weekly resistance turn support, before then getting a potential rejection to the upside. The problem is that if we go down on the daily time frame, we see a quite different scenario. In fact, from a daily perspective, it is quite clear how the market is currently trapped in a range. We have the bottom of the range here and the top of the range here currently acting as resistance. We can see how the bottom has already been respected multiple times and the top has been respected multiple times as well, and it continues to serve as resistance. Now, until the market will remain in between this resistance and support, we could simply expect more horizontal price action. Now, if we go and see what we have when it comes to the on-chain data, so how Bitcoins are moving on and off from exchanges, we can see here that the black line is the price, the purple line is the amount of Bitcoins on exchanges. As the price was dropping, the amount of Bitcoins on exchanges was dropping even more aggressively. Now that the price has been increasing again, we still continue to see a pressure to the downside on the amount of Bitcoins on exchanges. Now, this creates an illiquid market because if people are moving their Bitcoins away from exchanges, it creates obviously those Bitcoins have a lower probability, are less likely to be sold onto the open market, meaning that the selling pressure is getting decreased, meaning that if the demand gets increased or if the amount of Bitcoins emitted into circulation gets cut in half, which is exactly what will happen with the next halving, at that point, price should increase to accommodate for that new demand. So the fundamentals at the moment are quite strong. So we don't know if the market from here will remain in this range or if it will break it to the downside. Those two scenarios for now are definitely possible. However, it would take some time because at the moment the market is closer to the top of the range. So focusing on the situation in which we would be more in the short term interested in this pair is if we had a break above this previous resistance, which at that point would become support. Now, if we get the break after a break on the retest of this previous resistance turn support, things would become quite interesting because at that point, all that previous resistance would become support here. And on the retest of this previous resistance turn support, how we could be approaching a potential rejection to the upside. Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like in a comment. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.